time for the morning trade. For that, we bring in Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Alan, good morning to you. And why is Marathon Oil on your radar this morning? Does it have something to do with the crude oil movement?
It definitely does, and I've got a lot to say to my friend Ben that just had a whole diatribe on crude, and he was making the point, though, that it's inflationary, but I noticed he also was negative on the market when crude oil was at its lows because he thought that that was a demand issue, so you can't have it both ways. But anyways, before I get into today's trade, I want to talk about last week's trade with Oliver. It was in Marathon Digital.
Okay.
And Marathon Digital went from 8 to 12, and the option that we looked at gained 100%. So it's, again, on that show I talked about, it's not what you trade, it's how you trade. Now I'm looking at Marathon Oil. It's a stock that's been stuck between 20 and 30 for a year, and it's above its midpoint, above the 25. So if it can, it's going to move to the top of the range at 30. If it breaks out, the breakout target for Marathon is 40.
Now, I'm assuming that you're still bullish on this market. Is that correct?
Yes, absolutely. Now, the S&P, we're in earnings seasons. The last two earnings seasons, we've seen a move of 10%, and we've got some very, very low expectations for this season. We've already started strong, obviously, with the bank billions, and we're approaching that 4,200 level in the S&P. A breakout above 4,200 sends it to 4,600. We've been in this range sideways. Same range sideways in crude oil. Crude oil has been trading between 70 and 90. It's now above the 80 level. So, these markets here over my shoulder are used as a hedge, as price protection often, and to profit. So why not profit if energy prices are going to rise again and we're going to see gas prices run up? Then that means more profits for these energy companies.
Marathon Oil down 5.5% year to date. Analysts may agree with you that it's poised for a move to the upside, but walk us through the MRO trade.
Right. So this is a stock, like I said, that's been sideways for the year between 20 and 30. It's right at its midpoint right now. I'm seeing some leverage buying, which is an indicator that I use, that intelligent money is finding this to be the time to enter into this on a bullish side. Now, the way I play is important. I use in-the-money options as a stock substitution strategy. So last week, we bought the in-the-money $6 call for Marathon Digital. This week, we're looking at the in-the-money July 24 call. Now that option is trading for less than $4. It's about $2 in the money, and it's got 3 months of time. So the idea here is you're tying up less money, you've got less risk, and I call it a lose no sleep strategy because my maximum risk is the $4 that I put in on this option. But like I said, it's like being long from 24, which is a sharp discount to where we are right now. It's got a healthy delta of 75%, and if Marathon just gets to the top end of this range, this 30 range, then this option is going to gain 50%.
Now, looking at Marathon versus the other energy companies, why Marathon? There are tons of others that might have performed better. Is it because of Marathon's underperformance?
Yeah, partially, and I love the technical setup. And for me, it's all about risk-reward.
Okay.
And I try not to think too much about the markets, and I want to trade what I see. And what I see is very positive in the fact that it bounced off that bottom for the third time. That 20 level is a super, super level of support. And obviously, the energy complex appeals to me. So I like where this stands as a lower dollar stock as opposed to something like an Exxon or a Chevron or a Valero. That the probabilities and the math are much more beneficial to this being a $26 stock. A modest move in the stock, like I said, from 26 to 30 is a 50% gain in the option, and that's the way I like to position.
Alan, briefly before we go, any other theme in the energy complex that you're looking at this week?
Well, the theme is that those guys are making money, and the PE ratio in this complex is 8, okay? So we've got a lot of catch up to do for this group, and the PE ratio in Marathon is 4. So if you look in comparison, stocks are still cheap with the overall PE at 17, but these are cheaper than cheap.
Alan Nuckman, Bullseye Option, thank you so much. Now, up next, we'll focus on defense stocks. They've been mostly flat in 2023. And can rising global tensions change that? And which stocks could outperform the group? That's next on Morning Trade Live.